How's it going, YouTube? I'm Ari and welcome to Blue Lion Finance, a channel dedicated to dividend and value investing as I show you through my personal financial journey, investing during the upswings, downswings, and everything in between. Now, just to catch everybody up to speed, I initially opened up a Vanguard brokerage account for the purposes of YouTubing the entire journey for all of you to see. The brokerage account was opened back up in 2019 with an initial investment of $3,000 invested into a Vanguard index fund that has since then grown into what I think is a pretty strong dividend investment portfolio, now sitting at a record high of $98,923.85 just after this recent bear market mini rally, which to be honest, I'm not exactly a fan of, as I personally enjoy investing during periods of volatility to pick up high quality stocks at steep discounts. Now, after a week of Fed Chair Jerome Powell testifying before Congress, reiterating the Fed's commitment to fight a 40-year high inflationary rate at 8.6%, the Consumer Sentiment Report released this past Friday, revealing improved consumer outlooks regarding inflation, investors are certainly bullish. However, I do foresee a loss in momentum and definitely don't think we have bottomed out just yet. So in today's video, I want to reveal the 5 dividend stocks that I will personally be investing $1,000 into each of them should the market plunge to lower lows. Now, before we get going, make sure to tap on that thumbs up button and help me grow this channel. If you haven't already subscribed, go ahead and do so now. I'd love to have each and every one of you on this journey with me. Now, YouTube, let's go ahead and dive right in. So the first stock I want to talk about today is what I would consider one of the safest investments on the list as a consumer staples play, and it is Procter & Gamble, ticker symbol PG. For those of you who may not be so familiar with Procter & Gamble, I'm sure you're at least going to recognize a brand or two of theirs, from Pampers to Tide, Bounty, Tampax, Gillette, Old Spice, Pantene, Crest, Vicks, NyQuil. You get the point, with 65 total brands that all take front shelf priority over their competitors. Now, Procter & Gamble has grown into an industry powerhouse. Its founding dates back to 1837, which means they have weathered quite a few market storms, if you will, and have only continued to prove themselves, eventually leading to a market capitalization of $341.42 billion. Now, while we're talking numbers, they came in strong during 2022, already beating earnings expectations in January, raising their outlook for the remainder of the year, with sales growth coming in from a range of 2 to 4% to now a range of 3 to 4%. What makes Procter & Gamble a very attractive buy to me is the very fact that they are not only a recession-proof stock, but also poised to grow. Procter & Gamble set a goal about 4 years ago to have roughly 3/4 of its portfolio deemed superior to their competitors. Now, this strategy, along with a multi-year cost-cutting program, an innovation ramp, and a reorganization, enhanced performance, and is likely going to continue to only allow them to improve their profitability. As for their current share price, given the state of the market, emotional investors trying to gauge where and how exactly they should be investing, along with varying consumer behavior patterns, it's come down from its 52-week high of $165 per share, where it now sits around $144 per share, creating a nearly 13% change. While their PE is sitting at 24.9, I would say this may be a wonderful company at a fair-ish price that I will be buying should it come back down to a low of $130 per share, especially as analysts foresee a rebounding growth with an average share price sitting at $167.33 and a high stock share price at $185 per share. Now, even more exciting is that Procter & Gamble has a dividend yield of 2.54%, which they've increased consecutively for 65 years, making them a dividend king. Next up, let's jump into a financial services sector play to talk about Visa, ticker symbol of V, which we should note does not do anything other than facilitate electronic fund transfers, meaning they're just the middleman in a transaction every time you use one of their Visa branded credit, debit, or prepaid cards. And as the middleman, that means their business model has far less risk, given their revenue doesn't stem from interest or fees, but rather from client services, data processing, cross-border transactions, and licensing fees. Now, since their founding in 1958, Visa has become a world leader in digital payments, with its network spanning across more than 200 countries. It has thus been able to amass a market capitalization sitting at $409.63 billion. In regards to the stock itself, it is down from its 52-week high at $252 $252, now trading for around $205 per share, roughly an 18% change. Now, most of Visa's revenue stems from cross-border transactions as it charges a premium for currency exchange. So with years worth of shutdowns and virtually no travel, and even now with war between Russia and Ukraine, Visa has certainly not been trading where it should be, with a PE ratio that is also a bit high right now at 31.6. But if it does get caught in another bout of volatility falling to lower lows, I will be all in on Visa, as I'm aligned with analysts regarding Visa's future, coming in at an average share price of $270.11 and a high share price at $284 per share. Now, while I would predominantly be invested in Visa for its growth, it does shell out a dividend as well, which is icing on the cake for me, coming in at a dividend yield of 0.74%. Moving to my third dividend power play, it's a stock that actually has fared me very well since my initial investment. It's Medtronic, ticker symbol MDT, which is a world-leading medical device company that was established in 1949 and has since been revolutionizing the entire healthcare industry, leading to a not-so-surprising $119.08 billion market capitalization. Now, Medtronic over the last few years has had one challenge after the next, from the pandemic initially delaying elective surgeries, which inevitably hinders sales, to supply chain disruption challenges and labor shortages, all of which here leading to a not-so-attractive earnings reports, which is not exactly reflective of their potential. So I want to talk more about the impact of these market conditions on Medtronic's share price, as it fell from a 52-week high of $135 per share to a current share price of around $90 per share, creating a 33% change. And in my opinion, with such a healthcare leader and medical advancements remaining a top priority for the world, a stock like Medtronic will not be disappearing anytime soon. Its PE ratio is sitting at 23.8, not exactly at a level that I'm in love with, but perhaps paying a premium on a quality stock like Medtronic for a long-term hold is well worth it. So it will be a position that I'm going to be adding to. Now, I am excited looking at analysts' expectations, coming in at an average stock share price of $112.33 and a high stock share price around $125 per share. Now, until it rebounds, we can enjoy that dividend of theirs as a dividend aristocrat with over 4 decades of consecutive dividend growth, with a current dividend yield sitting at 2.82%. As for my fourth dividend stock, I will forever be buying, as it is literally the world's most valuable company. Let's talk about Apple, ticker symbol AAPL. Now, I've spoken about Apple plenty, and we all know Apple well, so allow me to give you just a quick bull case on it. As I mentioned, it is the world's most valuable company by market capitalization, coming in at a market cap $2.24 trillion. However, they also have taken the world by storm in terms of their products. They're coming out on top, whether it's iPhone, Mac, iPad, wearables, or services. Apple has become an icon with customer loyalty like none other. Now, year over year, they continue to blow right past analysts' earnings expectations. Just when we think Apple won't be able to deliver, they do exactly that, with their latest earnings coming in at $97.3 billion, which is up by 9% even amidst insane supply chain disruptions. What excites me even more is Apple's future once they introduce their VR headset to the world, and then come 2025, an Apple Car, which I've said before, but I'm going to say it again, will be a major competitor to face off against Tesla. However, even the world's most valuable company gets roughed up during market volatility, especially with interest rates rising in tech sell-offs. So Apple's stock fell from a 52-week high of $185 to a current share price of around $141, which is roughly a 24% change, or rather a discount opportunity. While Apple's PE ratio is 22.5, lower than other stocks we've already discussed, which is just mind-blowing to me. I definitely think it is worth the premium for very favorable long-term ROIs. Analysts expect an average share price of $189.26, a high stock share price at $205. Dare I mention the growth play also pays a dividend? Well, it does, coming in at a dividend yield of 0.66%. And finally, my most bullish investment opportunity that will certainly also require your patience. Let's dive into TROW Price, ticker symbol TROW. It's a well-established global investment management firm offering funds, advisory services, account management, and retirement planning for individuals, institutions, and financial intermediaries. After their founding in 1937, TROW Price was quick to become an industry leader, to which it has been able to grow its market capitalization to where it now sits at $26.14 billion. And if we want to talk about a steal of a deal, or a stock that has just been outright murdered by the pandemic and all the market conditions that have ensued, it's TROW Price, as the vast majority of their assets are tied to the stock market itself, and more specifically the NASDAQ, which, as you probably already know, has been the hardest hit index, making for a free-falling share price when it comes to TROW Price. price. The stock plummeted from a 52-week high of $224 per share to a current share price of $121 per share. That's a whopping 46% change, losing nearly half of its share price value with a current PE ratio at 9.3. Now, I'm incredibly bullish on such a valuable financial industry player for the long term because, well, yes, it will take some time for the market to recover. A little patience now will certainly deliver through on a beautiful ROI to come your financial future. Now, analysts foresee a comeback at an average share price of $134.86 per share and an even higher target price of $156 per share. And until TROW price recovers, we can rely on a very stable dividend king with a dividend yield sitting at 3.99%. Now, YouTube, that's a wrap for today. From Procter & Gamble to Visa, Medtronic, Apple, and TROW price, the 5 dividend stocks that I will be focused on and investing into should we be rocked by more near-term volatility, which again, I believe is certainly coming for us. However, I would love to catch your thoughts on these stock picks if they're in your personal portfolios, or which, if any, stocks have you been buying during this volatility. Drop all those comments below. I'd love to read through them. And of course, always do your due diligence following my videos. I am not a financial advisor. However, go ahead and tap on that thumbs up button for me. It helps me grow this channel. If you haven't already subscribed, go ahead and do so now. I'd love for you to be on this journey with me. Until our next video, YouTube, I will see you all there.